Hello, this is Mr. Bergman, and we're going to be doing Chapter 9.2, where we'll be journalizing cash payments using a cash payments journal. Before we get started, just want to review the special journals. If you remember, there are now 5 special journals that we're going to use in our corporation. Corporation is a business that is owned by stockholders. Many different people invest in the business. Now, with a cash payments journal, when would you use them? Well, you'd use them when you're paying cash. And so the source document for that will be checks. And that's what we're going to be working on today. Cash receipts. Anytime you receive cash, okay, you prepare a receipt, and that would go in the cash receipts journal. The sales journal is anytime you sell something on account, you prepare a sales invoice, and that's the sales journal. And then just last section right here, we worked on the purchases journal when you purchase something, and very, very closely pay attention, on account. Okay, that's the only time you would use a purchases journal. If you're actually purchasing something with cash, we're going to use the cash payments journal, and we'll show you that today. And then obviously the general journal is when no other source document would be used. All right, so with the work together problem for 9.2, it says the cash payments journal for Franklin Lumber is given below, and I'm going to guide you through the example where we're going to use the current year and transactions on page 10 of the cash payments journal. Notice that's page 10 right there. The checks that we write are our source documents, and they're abbreviated as C. We won't need to write down C, but it is very important that you know that that is a check. We have the following transactions going on here, and the very first one is on October 1st, we paid cash for a telephone bill for $85, and we wrote check number 321. Now, when you look at a cash payments journal, it's very similar to the multi-column journal that we've been working with. It has a date section, account title section, and this is different. It has a check number section, which we're going to use. Still has a post-reference section, also a general debit and credit section. But here's something that's new, accounts payable. Anytime that you have an accounts payable account that is debited, meaning you're paying it off, that is going to go right here in a cash payments journal. Notice it wouldn't have the accounts payable credit column because that would mean you purchased something on account. That's for the purchases journal, so we don't have that. The purchases discount credit column is whenever we receive a discount for paying, and we'll show you that later. And then obviously in the cash payments journal, this column right here, cash credit, is always going to be used. When we credit cash, that means it decreases in value. It means that we've made a payment. So let's go ahead and put our first transaction here. On October 1st, that's when we paid cash for the telephone bill. And we know that the telephone bill is a utilities expense. It's an expense for our business. And we have to put down check number 321. Now notice I don't put a C down, I just put 321. Now a utility expense, we have a couple different options here. We know that it has a debit balance. We know that for a fact. It could either be a general debit or it could be accounts payable debit. Now because an expense is not a liability account, which accounts payable is, that means we have to put down the amount right here of $85 that we owe in the general debit column. Every single transaction that we do in the cash payments journal is going to have cash as credited, so we put 85 bucks down. So very simple way to use this particular journal. All right, let's go to the next one here. The next one says on October 7th, we paid cash for office supplies for $52, and we wrote check number 322. So we put down the date, which is the 7th, and we know that office supplies, that's an asset to our business. We'll put down supplies office, okay, and we'll put down 322. Now we know for a fact that we are going to credit cash for $52. We know that for a fact. And that means we have to debit something. So right here, the accounts payable debit column, we could use that or we could use the general debit column. We know that supplies is an asset, so it is not an accounts payable account or liability. That won't work. So that means it goes right here in the debit column. Once again, we put down $52 in the general debit column, and then because we're writing a check and we're paying cash, we go to the cash credit column. Very simple. Now, on the 11th, this one's a little bit different. It says we paid cash to GMT Hardware for merchandise with a list price of $800. Now, when you go to the store or you order from a catalog, it has a price that's listed. If you buy a car, it's called a sticker price. If you buy it in a catalog, it's called a list price. So this is how much they say that that you should pay for this particular product. However, sometimes we receive a trade discount, meaning we're going to trade cash for this particular product. I mean, we're buying it, aka we're buying it. So a trade discount is a very, very easy type of discount to figure out. You would simply take the $800 that you have and you would multiply that by 60%. Now that's its discount. This is how much money that's coming off. Now you see these discounts all the time. You would actually go to the store and you might buy one, get one free, or you might buy something at 75% off. That's a trade discount. There's no need to record anything else other than the actual price. So this $480 right here, that equals how much of a discount we have. So we're going to take the $480 right here, and we're going to subtract that, because that's its discount right here. We're going to subtract that from how much they say that we should pay, $800. So we'll take 800, we'll subtract 480, and we get $320. That's how much we should pay for this particular product. This is very simple. A trade discount is very, very simple to record. We go in, we put in the 11th, we put in what we bought, and if you remember, we purchased something. It was merchandise, right? So we paid cash to GMT Hardware for merchandise. Here's the difference. This is why we don't put it in the purchases journal. Because we paid cash. We paid cash right here for it. So we put in purchases just like we did last section. However, we're paying cash. So we put down $323. We put down right here that we paid $320. It's an asset, so we have to put $320 here. And we know that we paid cash, so we always credit for $320. All right, let's go on to the next one here. Next transaction says, all right, we paid cash on account to West Supply covering purchase invoice number 199. Now, we actually, when you look at this transaction, when we see that we paid cash on account, what that means is we initially bought merchandise right here from West Supply, and we bought it on account. Now they're sending us a bill, and we owe them $3,420. We're paying cash for that bill. Now notice this last section right here, less a 2% discount. Sometimes what businesses will do is they will actually have you get a discount for paying early. So sometimes you'll see this on a particular bill, and it looks kind of confusing, but let me explain it. It's 210 net 30. That N stands for net 30. What this means is you'll get a 2% discount if you pay within 10 days. If you pay after the 10 days, if it was day 11, day 12, day 13, all the way up to day 30, it's due in 30 days, you have to pay the net or full amount. So businesses do this to encourage early payment. Yes, it does put them out a little bit, but it's well worth it when you think about it, collecting money from others. So this 2-10 net 30, that's what that means. So we get a 2% discount because we're paying within a 10-day time period. So we have to calculate that, and calculating is very, very simple. We'll first of all record right here that on the 17th that we owe West Supply, and West Supply is the name of the accounts payable account that we owe, because if you remember, we purchased it on account. Okay, now we're paying our bill on account to West Supply. So we owe West Supply, and this is where the accounts payable debit column comes in, we owe them $3,420. Okay? Now, we're paying early. We're paying within 10 days. So we get a 2% discount. Now, if we don't pay within 10 days, we have to pay the full amount. So this really depends on whether we're going to pay early or not. So how this is calculated is that we take the total amount that we owe them and we multiply that by 2%, 0.02. And we get a $68.40 discount. This column right here, the purchases discount credit column, this is for our discount. So we actually put in $68.40 into this account, and notice that it has a credit balance. Okay, this is going to come in handy right now because we need to make sure that cash, which has a credit balance, and our purchases discount, which has a balance, they equal your accounts payable debit column. Now, because we're paying within 10 days, and we got that 2% discount, that means we get to take this 2% off of our bill. It's a little perk for paying early, right? It's always good to be early. So when we subtract from 3,420, we actually pay, this shouldn't be a negative number, but the way I subtracted it, it did, $33.51.60. Okay, so when we pay our bill, we owe $3,351.60 because we got a discount for paying early. But in our books, we need to make sure that this full amount right here goes away because that was the amount that we actually owed the business, but because we paid early, we got a little bit of a discount. So that's why we're putting it in this special discount column. Now, sometimes businesses, they don't offer us discounts, as we're going to see next. On the 19th, we paid cash on account to Quill Forest Products. What that means is, when we paid cash on account, it means that we bought something earlier from Quill Forest Products on account. And now we're paying it off. We're paying cash for it now. This purchase invoice number 182 is not a huge deal because when we bought this stuff from Quill Forest Products, we bought merchandise, we recorded it in our purchases journal. However, now we're paying it off in our bill, and we got to put this amount right here as in our cash payments journal because we were paying it off. So we put down the 19th. We'll put down Quill Forest Supplies. Whoops, and in my previous example right here, I forgot to put my actual check number, so sorry about that, 325. And then what I do is, because I am paying my bill off, my accounts payable account, that means I'm debiting accounts payable, okay, I'm putting down 4,380, and I'm writing a check for 4,380. Now you might be asking yourself, well, why isn't there a discount? Well, sometimes businesses don't offer us discounts for paying on time or early, and so with this particular example right here, both of these numbers equal one another because there was no discount.